Hello everyone, welcome to another interactive session on equity markets and the way forward from AKC Capital. With me today is Mr. Harshad. He's the head of research for Mirae Asset Investment Managers India. So thank you once again for being part of the show.
Sure.
And so what we'll do is we will be basically covering session on equity markets, and which brings me to the first question: is that obviously, India is a favored investment decision in the emerging markets. How do you see the current sentiment evolving vis-a-vis Indian equity markets?
Sure. So I think if you look at last 6 months particularly, or let's say last from September where markets peaked last time, right?
Right.
So markets have been quite volatile. So we saw up move and down move to the extent of 8-9% on both sides. But I think what we should see is in the context of last 3-4 years, right? So we have made investors have made decent money in the last 3-4 years. So at the current juncture, while valuations are, I would say, slightly premium to long-term averages, but at the same time, one should note that if you look from the earnings trajectory, so FY25 obviously was weak. We just concluded the fourth quarter earnings. But from the next 2 year forward, we are looking at 12-13% earnings growth, and within that, if you look India as a position, it clearly stands out vis-a-vis, I would say, global economies from the growth point of view.
Right.
If you ask me, the markets, I think right now, unlike last 2-3 years where it was more top-down approach one could have taken, but now it's bottom-up approach one should take.
Okay.
There was a lot of froth in many sectors, I would say.
Right.
I think that has now corrected. So for now, I would say it's there is optimism in the market, but one has to be cautiously optimistic.
Right,
Let me put it that way.
Okay. Thank you for your input on that, which brings me to the next question. Especially now, you're seeing a lot of factors which are impacting global equity markets. We've talked about geopolitical tensions. You've seen tariffs. And domestically we've seen a cycle of interest rate cuts. So how do you see both these external as well as internal monetary policy measures being impacting Indian equity markets, both on positive or the negative in the short to medium term?
Sure. I think I would say India, while per se is an inward-looking economy.
Right.
When I say inward-looking, it's that we don't have connections globally. Clearly, there are some sectors which do get impacted by what happens on the global front, particularly on the US. But having said that, while as you rightly said, a lot of turmoil, either geopolitical or policy decisions driven, which is happening globally. But India, as I was saying, stands out on few things, right? One, if you look at our fiscal prudence by the government, right? I think that is very much intact. In the last 3-4 months, we have seen a lot of positive support from the monetary policies, which is always there. But particularly, we have addressed to the large extent the liquidity issue from the RBI. Then, if you think from the capex cycle point of view, so last 3-4 years, government was the one obviously which was doing capex. But now, as we speak, I think 12 months down the line, we should see private capex coming back. So interlinkage of India with global markets, I would say 90% of our sectors could be like domestic.
Right.
Some sectors like let's say IT, metals, oil and gas, they do have global linkage. Pharma to some extent is dependent, but unlike China, which is like more dependent on exports, I think that is not case with India. And yeah, I think net India clearly is, I would say, from the growth point of view, if you think from the investable economies, so we clearly stand out from the higher growth. The second important point is the longevity of growth. I think even if you take a view of next 3, 5, 6 years, I think we have a long in terms of longevity from the growth point of view. So valuations, yes, one can say that valuations are slightly ahead of long-term averages, but at the same time, one also needs to be cognizant that there is a growth path which is clearly available from the long-term perspective.
So if I infer from your points, I think you're saying that obviously the way forward would be more inward looking to domestic market, while we do talk, they talk about the interlinkages with the global financial system, equity markets. But is it fair to assume that that impact to some extent would be limited? Is what my takeaway would be on Indian market, because driven predominantly, let's say, by consumption on services side. Is that is
Sure.
my
So
inference
let me
correct?
just clarify what I was trying to say. So it's not that we are insulated from global
Right,
factors.
right.
Like if you go back to 2008 global financial crisis or taper tantrum.
Correct, correct.
So in all these events we did get impacted. But the point is the bounce back was also very fast. And the second important thing is, if you look at, let's say, top 500 companies in India. So dependence on the global factors for this top 500 companies is very less.
Okay.
So I would say linkages are there, but much lesser than
What?
country like China or other East Asian countries, for that matter.
Okay, got it. Okay, got it. So I guess that's a useful input, which brings me to two emerging crises which are happening as we speak right now. One is, obviously, I would like to add on, and it's like add on to my second question, is that you talk about the spiraling conflict in West Asia. You've seen about Israel-Iran conflict, which seem to be have kind of taken. So my inference is the first casualty, obviously one could think, is crude, which is kind of gone up 13-14%, $75 as we speak today. And second, I think we've talked on a clampdown on rare earths. Rare earths is a special category of metals, minerals. I'm not a specialist, but but I do know that these components are extremely critical when it comes to semiconductors and aviation parts, so on and so forth. And China is today controlling, if I'm right, 70% plus of this supply side. So how do you see this two crises, impacting certain sectors in India? That could be one part, and maybe or let's say the Indian manufacturing and other ecosystems.
So I think so first, let's say oil, right? So history has shown that while typically for a commodity the price is determined by the demand supply scenario, but oil is quite different animal, I would say. So it's more driven by geopolitics.
Right.
So it really doesn't matter what is the marginal cost of production in oil.
Right.
So in that context, if you think one from the demand supply point of view, I think oil markets are clearly well supplied. That's what looks like. If you look at the OPEC decisions in the last 1 year or so, so they have also amply increased the supply.
Okay.
Secondly, from the demand point of view, while it's not, I would say, immediate, but over the medium to long term, there are headwinds from things like emergence of EV or shift to renewable energy. So unlike the, I would say let's say there was a certain correlation of world GDP growth to the oil demand increase. I think that correlation is slightly reducing. So oil dependence for the growth will be incrementally lower than what it was historically. Having said that, from the India point of view, this near-term conflicts in terms of what is happening right now, so higher oil price for us is obviously negative. Historically, I think what I have seen is that if oil goes beyond, let's say, 90-95, then that is the period where our budget starts getting stretched. Your own individual budget gets stretched. But till the time I think oil is below, right now obviously we are at 75. I think till the time it is let's say 75, 80 or even 85, I think we are largely okay on that front. But higher the oil, negative it is for us. So lower it is better. That's point number one. On the rare earth metals, see, the point is you cannot really shy away from interdependence of various nations. So while now there is a lot of talk of late, particularly post this US policy decisions in terms of whether are we in the phase of deglobalization. See, all these things cannot happen in the 1 year or 5 years, right? So to that extent, I think the way it happened on the tariff side, right? Initially, what we thought, it's kind of a doomsday scenario in terms of way US policy actions were taken. But now there is a midway which is coming up. I think similar thing would happen on the rare earth metals. Clearly, in the near term, there will be disruption. Right. But win-win situation should emerge. Otherwise, people cannot or countries cannot work together, and eventually growth will get thwarted, which nobody wants. That kind of scenario.
Okay. No, I think that's an interesting part, and I think this kind of converges with my point of view. I think whether you look at the tariff thing which started, in Feb onwards, eventually turned out it was more like a bargaining tool to negotiate and come to a common trade agreement.
Yes.
And as we speak today, we are seeing most countries trying to renegotiate the trade terms with US, so on and so forth. So you're finding a new normal, right?
Yes.
Similarly, maybe you'll find a new normal when you come around issues like that, right? But clearly, I think the dynamics around crude are a little different, especially because we are a net importer of crude.
Yeah.
And so we hope that this situation does not spiral out. I think that's a quick takeaway which I'm taking there from this piece. Which brings me to the next question is that when you look at the SIP trend in this country, I think the last number which comes to my mind is around, we were close to around 26,800 crores per month.
Yes.
And SIPs have kind of especially grown in the last 2 months when you've seen equity inflows coming in April and May, which have been positive months. So do you see this trend for SIPs continue over the next couple of years? How do you see that trend shaping up?
See, well, I think no one can make clearly definitive statement on this.
Okay.
But I think few things, what really has led to this large inflow of SIPs, like, let's say if we would have been discussing 3-4 years back, same thing, we would not have imagined this kind of inflows on the SIPs. So clearly, I think what has happened is, things like digitization coupled with financialization, and then the young population who are okay to invest more into equities or like mutual funds. I think this is a new India what we are looking into. And 5 years back, if you think from the, I'm not sure the data, but it was more about, let's say, middle-aged or people who were around retirement, who were part of the investment community for the retirement point of view. But now I see, the people, with the first salary, they want to invest in the mutual funds. So to that extent, I think this is something new which has happened in the last 3-4 years. SIP numbers surprisingly, or I would say, has been quite strong. Earlier, what used to happen that, any fall in the market, we would see, retail investors taking out money from the market. But I think that has not happened in the last 1 or 2 years, whenever there were minor corrections in the market. So I would be surprised if, SIP numbers will be lower from here. My bet is more, it should be much higher from, where we are right now.
Okay. Now, thanks for input. That's interesting. And if a quick, maybe last 2 questions as we, looking at the time, is that, we've seen a recent surge in inflows coming back to, small and mid caps. And this is especially some kind of a turnaround from what we saw from September last year, when you saw that earnings cut downgrades and you see a lot of FI outflows happening, especially until December and a larger part of Jan as well, right? So this turnaround which has happened, do you feel that while one can argue to the contrary that there has been significant correction, but do you still feel there's a belief that the valuation, especially in small and mid caps, are still stretched? So do you feel that these inflows is justified and investors should be cautious here?
Sure. So I think again, let me take last part first. So when you say valuations, right?
Correct.
So historically, always, mid caps and small cap valuations have been higher than the large cap. The reason being, typically mid and small happen to be higher growth kind of. If the company is smaller, the runway to growth is higher. But I think let's look at the data. Let's if you go back to FY 18-19, right? In the top 500 companies, the share of profits of mid cap and small cap used to around 18-19%. Now, as we speak, I think the share of mid and small cap in the top 500 earnings has moved upwards of 27-28%.
Right.
So the point is, the mid cap and small cap, while they are called as mid and small, they are no more small, right?
Yeah.
So for example, 5 years back, the largest mid cap company used to be 25,000 crore market cap.
Right.
Now in that index of, the smallest market cap is 25,000 crore.
Big difference.
Similarly, the largest small cap used to be 10,000 crores.
Right.
Now the smallest small cap is 10,000 crores. So clearly, these companies have grown in size in the last few years. Going forward, if you think from the runway of growth, clearly they will have a higher runway of growth. But obviously, the other thing to look at it is the volatility is higher for the mid and small. From the valuation point of view, I think now, if I'm not wrong, they are trading at 15%, 10 to 20%, I would say, premium to long term averages. But I think the premium valuation has to be looked vis-a-vis the earnings growth.
Right.
So here I think the earnings growth is higher, and second I think the most important point which I believe is that if you look at the number of sectors which are available to invest, right, in the large cap the number of sectors are quite less, almost 30-35% are like financials, right. But if you want to invest in the high growth sectors, you have no option but to go in the mid and small.
Mid and small, yeah.
So I think all these are pros and cons, and I mean it really depends on your risk appetite, what you want to do. But from the runway of growth, I think clearly it is higher for mid and small vis-a-vis the
That's an
large.
interesting takeaway, and I think just to summarize that input, I think good room forward for growth, like you mentioned, more more avenues for growth. But like I said, every investor will have to look at his or her risk profile.
And
asset
unlike
allocation.
large cap, I think mid and small has always been and will remain a bottom up approach when you approach this
fair.
segment.
Good. Yeah, so that's a good perspective. Which brings me to the last two questions. One is that which emerging sectors would you be bullish on going forward?
Sure.
And maybe I would like to break it up into, if I can say, short term, medium term, and long term. Which sectors would you think would be doing well going forward?
Sure, I think I'll answer maybe other way around, where we are, let's say, overweight at Mirae Asset right now.
Right.
I think it's rather than emerging. So I think one sector what we still like is financials, within that private banks.
Okay.
I think
banks,
while that sector has moved up in the last 6 months, but I still believe that there is enough room for growth even from here. Then second piece, I think we had taken a kind of a contra call a year back, was pharmaceuticals. So there I think we are overweight. While there was a noise in terms of tariff and all, but still we continued to hold our position, and we still believe that that sector should do well going forward. Well, again here valuations have moved up. It's no more cheap as it used to be. Third, I think what we like and we have been overweight is a consumption as a piece, X of FMCG or X of staples.
Okay.
So when I say consumption, it includes discretionary, retail, QSR, even building materials is part of that.
Right.
I think that theme, according to me, is the next 3 to 5 year theme for story. Simple thing like new houses which are built in the last 4 or 5 years.
Correct.
I think as these houses get delivered, you will require all the ancillaries like paints, FMEG and all those kind of things. So late cycle beneficiary of this housing cycle are part of a consumption. Then discretionary, when I say when I said retail, QSR, I think the point like young population, point like increasing per capita income, all these will flow through. So these are themes which I believe are not 1 or 2 year theme. These are the next 3 to 5 year theme. And beyond that, if I have to think of, I think I will think of manufacturing, but I think it's too early right now to really say. Obviously, things like PLI, China Plus One is working out, but that is the one theme which I would look forward to and study closely.
Okay. Great. So I think that's a insightful thought into terms of the sectors, or let me say, sectors you're overweight on in the medium to long term time frame. So that's a good insight for viewers here. And last part of the question is that as obviously we all know the India growth story, and we would like to take a long term view. But we did talk about geopolitical risk, but any kind of risks beyond this which you see which we should be aware of? Generally, any other points that come to your mind?
No, I think so. If you think from the risk point of view, for us as a country, for us, India corporate as a whole, I think is more about execution. The focus is, we as a country, we should focus more on, executing it properly.
Fair enough. That's a good takeaway.
For us, I think this is a time for India, as everyone says, and we believe, this is the time for India. So we have all the things in place, right? there is a political stability. As I said, monetary fiscal stability is there. You have a younger population. You have MNCs who want to come and invest in India.
Right.
So all those things are in place.
Right.
Now it just boils down to execution. Don't get too much worried about all these macro factors, geopolitics. These will happen,
This will
over
happen.
the. But I think, yeah, if I think from the all, see somebody sitting in, let's say, New York, London, Singapore, who wants to invest or allocate the money, right?
Yeah.
X of US, X of China. If you have to think of, which country I should allocate to, I think India clearly that comes number one, and then there are other options which I think one can look at.
Great. Thank you so much.
Sure.
So I think with this, we'd like to culminate this session because for the sake of time. But as concluding remarks, I think as on the distribution side, I think, and what Harshad has been mentioning, I think while equities give you a significant long-term advantage, it's very important to be cognizant of one's risk profile, investment time horizon, the asset allocation, and within that, again, you really have to understand the client end of the day when you are making the investment portfolio, and especially allocation between large, mid, and small cap as well. So I'm sure that's a work the wealth distributors and the advisory community would do well. But thank you so much for your insightful inputs on equity markets. That's a great learning for all of us, and thank you once again for your time, and my gratitude to Mirae Asset Investment Managers for giving us an opportunity to be part of this interactive session.
Sure.
Thank you so much, and looking forward to a lot more.
Yeah. Thanks.
Thank you so much.